So what will be the impact of this election on your retirement nest egg? How will you react? Are you going to lose sleep at night? Are you worried if the other side wins? In this video, I will share with you the biggest mistake that any investor can make during this election cycle and so much more. Hi, my name is Mark Singer, founder of Your Retirement Authority and president of Safe Harbor Retirement Planning. If you're interested in up-to-date and timely information about your retirement, click on the link below to subscribe to our channel and be notified to when we post new videos. So I heard a story the other day from a financial planning friend of mine who said that his client said the following to him. You know, if, and she pointed to the other side, if so-and-so wins the election, I'm going all to cash. Now, I don't know if you've thought about this, but certainly for many, it's top of mind. What do we do with our money? Do we anticipate which side might win? What will we do with our nest egg? And do we go to the very aggressive stance of moving it all to cash? So let me start with one mistake, not the biggest mistake, I'll save that for you, but one mistake I think many people make during times like this. And my question to you is the following. Proper perspective. What is your time horizon when it comes to your money? Is it a day, a week, a month, a year from now, or longer, 10 years, 20 years? For if you are looking at the headlines or letting your emotions play into how you're investing now in anticipation of how you might think the election outcome might be, then you are a very short-term thinker in terms of your investments, or have changed the way you're thinking because of the election to think short-term when you know that's contradictory to the long-term planning we know we must have for retirement planning. The one mistake, or a mistake, many investors make is to allow these headlines to change their perspective and think in a much more shorter time frame than longer. Another question to be asked is, are election fears overstated? Now, we know as a general rule that Republicans tend to lower taxes and Democrats tend to increase taxes. And in your gut, you might feel that the market would much prefer the more pro-business lower tax rates that the Republicans tend to have on the table than the less business favorable or higher tax rates that the Democrats might bring to the table. But the reality is, studies have shown that the markets actually have done better during Democratic administrations versus Republican administrations. So it's important to keep this in mind. And even another question for you that you might be asking yourself, is this time different? Are we in a place and time that we've never seen before? Certainly, we've never seen a pandemic like this. We may not have seen such an inability to communicate with each other like this, or in many, many, many years. But again, getting back to the basic fundamentals, there is always this back and forth, this acrimony between the two sides. It just seems to be very heightened and very polarized right now. But the reality is we have been here before. And the reality is, as again, going back to taxes and its impact on the economy, because it's such a big part of the conversation. The markets know what the markets know. And in Democratic administrations, they've done a little bit better than they have in Republican administrations. And I'm not be a proponent for one or the other. I'm just trying to give you a way to think about it. I'm neither blue nor red. I'm wearing green. Okay? Let me ask that question in a little bit different way, because I think it's a mistake that people make, and it happens with almost everything that happens in Washington and in Congress. Have we been here before? Have we been to a point where people are at each other and, dialogue from one versus dialogue from the other, and nobody's listening to each other, and, extreme talking points are being offered? The reality is, again, we have been here before, and more often than not, the volatility with regards to both the language and market performance is really in the lead up to when things actually happen. In other words, as the conversations get heated, so do the markets. But once actual law is put in place, oftentimes the markets then get more clarity and more certainty, and they are much better off as a result. So don't get caught. It's a mistake we all make in the emotions, in the anger, in the loud voices, in the market volatility that we're seeing now. Because at some point, not in the too far distant future, we will get clarity, we will have some certainty, and the markets will go back to doing what they do best. And every decade going back 100 years, look at any graph chart you see, the trend of the markets is up. Certainly there's no guarantee for any future performance. But as you can see over the last 100 or so years, we've been moving in the right direction. So I'm on a lot of conference calls as a result of trying to stay on top and abreast of things for my clients. And there was a wonderful conference call recently put on by Blackrock, and one of the items they talked about was the amount of money that goes to the sidelines during an election year. And the number that they talked about was $900 billion. There's an awful lot of uncertainty right now. Getting back to the comment from the woman who is a client of a friend of mine who says, I'm going to go to cash, very unsure, having sleepless nights, right? We're very uncertain. The markets are volatile, and a lot of money does go to the sidelines, and that's very normal. So in election years and afterwards, the numbers indicate that the markets do very well. Again, certainly there's no, guarantee for future performance, but in 14 of the last 17 election years, the markets have gone up. Now, the tech bubble and the most recent recession and global financial crisis were two of the exceptions. But 14 of the last 17 election years, the market's gone up. And the year after the election year, 8 of the last 9 times, markets have gone up. Now, I said to you, I'm going to give you the number one mistake investors make, and we're getting to it right now. And I want to share with you my screen so you can get a sense of exactly where we are and what we're talking about. So as you see this screen, and I apologize, it is a little busy, but it's very important to understand. On the left-hand side of the screen, what you can see is the satisfaction level of Americans about the way we're thinking about things right now. Are we satisfied with where we are? And this goes back to 1979. And as you can see, back in 1979, 12% of those surveyed said they were not happy or satisfied with the way America was headed, where it was going. You can see that there's been 4 or 5 times we've bottomed out, and the most recent time was August of this year. So again, the question, have we been here before? Yes, we have. We can see that we've been dissatisfied with where America is headed. This is not the first time, and I'm sure it won't be the last. But the question becomes, what is the impact of this low satisfaction level on markets over the following 12 months? And interestingly, When we have a satisfaction level of below 33%, the next 12 months, the markets have averaged over a 14% return. Interestingly, the more satisfied apparently we are with the country and the way it's headed, if that number is over 50%, then the markets are only returning a little over 7%. So here is the biggest mistake you can make with your money, particularly as you're headed into or already in retirement, because right now you're looking to preserve and protect what you have, right? The biggest mistake that you make is letting this discord, this dialogue, this heated level of conversations impact the way that you have been doing your planning and investing. You need to divorce yourself from the headlines. You need to forget about the fact whether you're on the left-hand side of the aisle or the right-hand side of the aisle and afraid we're going to go the other way, or whether you are blue or red. We're all looking for the green, right? You must keep in mind, you must divorce the emotions from the economics. I've given you enough data to understand, enough perspective to understand that we are invested for the long run. Where we are right now doesn't feel like a happy place, but we will get through this. We've been here before. We got through it before. And the markets appear to be, as Blackrock has stated, in a very bullish way. Now, we may see more volatility as the election, one of the questions we have is, what if there is uncertainty with the election outcome? Now, we've seen a little bit of this before, but this may be, at a level we've never seen before with armies of attorneys on both sides, right? Well, getting back to the fact that there's almost $1 trillion that has been moved to the sideline, the consensus appears to be that this amount of cash will lower the amount of volatility and uncertainty the market is going to experience during this uncertain time where we might have an election that is in turmoil. So what I need for you to do is step back. Set aside whether you're watching CNN or Fox. Put it to the back burner. Turn it off. Remember, if this is about our retirement and not about our politics, then we need to maintain the course and we need to stay the direction we've been, not turn ourselves into daily traders, but keep ourselves as long-term investors and make sure that our investments now are in alignment with our goals. If you need to make minor adjustments, so be it. But do not make that one big mistake that so many investors do, which is to make an enormous change to your portfolio in anticipation of or soon thereafter the election and its outcome, because you may be the worse for wear. I really hope that you've enjoyed this video. Please click on the button below to subscribe to our channel and make sure that you take a look at our next video. Thank you.